I think we really do have to look outside the U.S. and look at China. I mean, we see what's going on with China and the U.S. in terms of the trade wars, and China drives a lot of what goes on in this region. In fact, if you look at the exports of China to the U.S., they're only about 7%. So all the hubbub and all the talk about the trade wars really only scratches the surface. Now, granted, it's a very, very large surface, so the bulk of trade from China is actually done with other partners within Asia. So we're very conscientious of looking at the region as a whole and not just focusing on the U.S. as the key driver.
How important are the trade tensions for how you view client investments at this stage? I mean, we're talking about the two biggest economies in the world. They do affect many of the investments, no matter where you are, globally speaking. As a portfolio manager, is it front and center for you?
At Eastspring, we feel like the trade tensions are a lot of noise. It's driving the market in a lot of ways. It's a very sentiment-driven market in Asia, and in China in particular, it's marches to the beat of its own drum. It's a very domestically driven market and very retail-oriented. There's a lot of macro news, and people trade around macro more than fundamentals. But if you actually look at the region, if you look at the trade wars, it's not that meaningful. We prefer instead to focus on what's going on within China domestically. If you look at the Chinese consumer, there's huge opportunity there. The Chinese consumer is very strong. We see a big trend toward premiumization. So think about things like gyms and cinemas and air travel. I mean, only 9% of the Chinese population even has a passport. So there's a huge growth opportunity there that really has nothing at all to do with trade wars and is very domestically driven. And so we think that story is only at the very, very early stages.
Sarah, we've heard so many things, perhaps negative comments and data points about the economy in China, that it is slowing down, that they are being hurt a little bit more than many had expected because of what's happening with these continuing trade tensions and perhaps a global slowdown. Is that something that worries you, the China economy and its strength versus its peers around the world?
Not so much. The China economy has slowed, and I think that's actually a good thing. It's very much driven by the quality of growth as opposed to just growing for the sake of growing. So that's actually quite good and should have long-term positive effects on the overall Chinese economy, that it doesn't get ahead of itself. I mean, we're still looking at 6.5+% growth depending on whose estimates you use. So, you're hard-pressed to find that level of growth anywhere else outside of China and Asia. So we still think that the growth looks very good. Sure, it's lower than what it was a couple years ago, but it's certainly still very high.